Hello, I'm Paul Jourdan, CEO of Amati Global Investors, and it's my great pleasure today to introduce to you the TB Amati Strategic Metals Fund, a new fund that we're launching in March this year. And I have with me the fund managers of the fund, Georges Lequime and Mark Smith. I was looking last year for a fund to invest in the mining sector, and I was particularly drawn to the idea of being able to invest in precious metals mining companies at the time, but also understanding that there's some really interesting opportunities coming up in the natural resources field for metals which we're going to need as a world to enable energy transition away from fossil fuels and towards electricity. This is going to place some huge demands on the supply of natural resources. And I was talking to a friend of mine about what would be the best fund to invest in this area. And he said to me, well, you know, I would very highly recommend a team from Earth Resources, and that team primarily consisting of George and Mark. And I had a look at the fund and thought, yeah, this is really interesting. And the reason it was interesting is because this was a fund of a type which is very difficult to find, which really focuses on the small and mid-sized companies amongst the mining companies of the world. And to do that requires a lot of specialist expertise and real knowledge of the mining industry and the detail of how mines work to make good investments in that area. And but then to my sadness, I realized that this fund that George and Mark were running was not available in the UK. And I followed up a few conversations with my friend, and he introduced me to George and Mark, and it turned out that they were very keen to launch a fund in the UK of this type. And we had some discussions, and I got very excited about the idea. And between us, we agreed that rather than just launching this as a precious metals fund, which would make it interesting at certain times of the cycle, but not necessarily for the long term, we should make this a fund which was more adaptable than that, which would cover not just precious metals when they're important, but also the whole range of base metals and what we're calling strategic metals for the electrification of the world as well, so that it would be able to be something that could be held for the long term. And it's something very important to us at Amati. If we present a fund to the market, we want it to be something that the investors can buy and hold for a long time, and let us worry about the strategies that we apply through the cycles. So I'm very pleased that we got to this point. I'm really delighted that we were able to bring this fund to market. And this video is really about introducing you to George and Mark. And so why don't we maybe start? Perhaps George, you could introduce yourself a bit and talk a bit about your background in the industry.
Thank you, Paul. And yeah, we were equally excited when we met Paul. I think the relationship really grew because our way to look at the world was very similar to Amati's, and we want to share a little bit about that with you. Just my background, while a lot of investors in the UK may not really know myself and Mark, we have been running this fund in Europe for, it is 13 years now. I'm a mining engineer by background. I studied mining engineering and then worked for Anglo American initially on the gold mines in South Africa, and then on the 4 years on the coal operations, where I was doing a management program and studying economics at the same time. I then went into Old Mutual Asset Management in 1994. And since then, I spent 17 years fund management business and 9 years in investment banking, a lot of that on the corporate finance side as well, doing the precious metals and base metals. I've been based in the US, in New York, and in London. And as Paul mentioned, so we are based here, and we have been managing the Earth Gold Fund since I started the Earth Gold Fund under the Earth Resources banner in 2008. And on the presentation, you can see the fund has done really well. We've consistently performed extremely well against our peers, and this is really what we wanted to bring to the new fund, the Strategic Metals Fund. So I'm going to hand over to Mark Smith to introduce himself as well.
Thank you, George. as George saying, that the uniqueness of our team is our dual expertise with both strong technical background in mining, geology, exploration, but also financial investing through the investment banking experience at Royal Bank of Canada and some smaller boutique investors that I work with. My initial background is geology. I did a degree in geology and then went out to Africa, West Africa, Senegal, Mali, and then moved across to Ghana and Tanzania in gold exploration, grassroots, greenfield exploration, and also brownfield exploration around mine sites. So that was the original springboard for me to look at the mining industry and the investment side of the industry. I came back to London and did my MSc at Royal School of Mines in mineral project appraisal. And then that gave me the qualification to get into investment banking on the research side, covering precious metals and base metal producers, mainly in Africa, but also further afield in former Soviet Union and Europe. After 11 years of working on the sell side, on the research side, I joined Earth Resources with George. I've been there for 10 years now in company evaluation, both in the precious metals and base metal sector. And I think the closeology of working with George, we're very similar in our approach to looking at companies and evaluating them. And with the overprint of the dual expertise, it's quite exciting that we can apply both our precious metal and base metal disciplines to this new fund. So we're quite excited about it.
Great, thank you. Why don't we just start? I can imagine some of the viewers of this right at the beginning are going to be saying, well, I thought mining was polluting. I thought it was very closely associated with lots of bad practices, with wrecking environments, corruption, etc. Perhaps George, you could just say a little bit right at the start of this about how we're dealing with those issues and how why we think actually it's really important to be allocating some capital to natural resources and particularly mining.
Thanks, Paul. We're seeing a pickup in demand for metals, specific metals as well. And I think although it can be deemed a dirty industry, and a lot of investors shy away from investing in the mining sphere, we're getting a big drive towards green energy, and a lot of that green energy initiatives employ different metals, and we've got to see where these metals are coming from. We're looking at infrastructure programs in the US and across Europe and Asia as well, very metals intensive programs. In the meantime, we've had underinvestment in metal and mining projects around the world. I think to look at the mining side, I think what is very interesting is the big ESG drive that we're seeing globally from the fund management industry. And because the mining companies were always deemed to be dirty, they've really been forging ahead with the ESG programs and really trying to show investors, look, there are a lot of positives to what we're doing. We bring in a lot of positive aspects to the mining is not 12-year-old children working in little tunnels underground that can collapse or in dusty atmosphere. A lot of these mining companies are very responsible in the way that they do operate. Obviously, there are some bad eggs, and that's our job, is to avoid those. We'll have very strict criteria, not investing in companies that employ negative practices or practices that we deem unpalatable for investment purposes. But we are seeing a big change, even from the pollutant side, employment practices. This is. And I think what's going to happen is investors are going to stand up and say, well, they're not as dirty as we thought. We can get some clean mining, and we don't have the metals to feed these programs, global programs that we're looking at. That's the exciting bit. Paul.
Yeah, and just before we bring Mark in on this, ESG, it's an acronym that's used so much in investment circles now that we take it for granted, but it's the E is environmental, the S is social, and the G is governance factors that investors all over the world are now bringing to bear in their investment decision-making process. And it's clear, it was very clear to me early on in our conversations that these were very deeply embedded in the way you've been working with investing in mining for many years. Mark, would you mind just talking a little bit about some of the positive impacts that mining projects can make on communities when this goes well?
Yeah, thanks, Paul. I mean, from first principles, with my own experience, we went into parts of northern Senegal where they hadn't seen a white person before, right from the word go, and we were a small exploration company. What we provided with our small budget then was providing water wells to the village. I held school on a Saturday and Sunday, just teaching the local children English and maths. And I can say at 7 o'clock in the morning at our mine gate, there were children 10 deep wanting to be educated. And it got so popular that the local government and education department, if you can call it that, encouraged us to close us down because we were embarrassing the local government with what we're doing on our social education program there. That was just one small example. When I was working in Tanzania at the Gator mine, the Gator village before that mine was discovered and put into construction and production, there was very little there. There was a mud road and diesel generators powering one pump from the river. The amount of money that went into that local economy had such a multiplier effect that the regional towns and villages benefited as well. So you can say from the campaigners against mining that all we do is remove their natural resources and don't return any value to the local economy or to the society. But that's quite different, actually. If you're on the ground and you're working with these people, you're employing them. For example, a drill rig, if you're drilling a resource, you need probably 20 to 30 people to help you manage your drilling campaign through logistics and geology and drilling. So that's 30 people on one rig. If you have a big regional exploration program, you may have 10 rigs on your property. That's 300 odd people that you're employing. So it's these kind of multiplier effects, which for me, they're soft issues and they're quite intangible to demonstrate, but there is a positive effect on exploration and mining in local economy.
Yeah, thanks, Mark. And I maybe should just bring out at this point that I think this fund will probably be unique in that we're going to be adopting a clean trade approach, which is really a human rights factor in addition to these ESG type factors we've been talking about, where if a country is really so oppressive that it's impossible for the actual beneficial impact of a mine to offset the problems that are caused by funding and a very highly oppressive government, that we won't be investing in those countries. And that's really a kind of initial macro decision that we make, and we can happily provide more detail on that if any viewers are interested. Why don't we talk next about the idea of this being a through the cycle fund? And George, perhaps it would be possible to talk a little bit about the interplay of when you want precious metals in a cycle and why they're important at the moment, and then maybe what we're thinking of beyond that with the metals that are going to be required for wholesale electrification of the fossil fuel energy supply chain.
Yeah, this is one of the factors that Paul and I spoke about when we looked at what's this fund going to be all about. We didn't want a precious metals fund. I've been running a precious metals fund for many years, and it is very cyclical. Although we tend to still be positive about precious metals, there'll be a time where you say, okay, the sector's got a bit heated, metal will come down. So what we try to do is move away from that, because when we look at the whole cycle, and we know through cycles, there's a time to be invested in precious metals, and then we're moving on to the base metals and the energy dependent metals as well. And then overlaying the whole investment sphere at the moment is this move towards green energy. And we have demand rising for cobalt, nickel, critical metals, but each metal moves in its own little cycle, and we do have changes in technology which reduces the demand for certain metals at the expense of others. So what we would be looking at in this fund and saying, okay, which metals actually look quite interesting? So through the cycle, they don't all move together. As I mentioned, there'll be times to then shift our investments more towards the base metals, more towards the precious metals when that time arises, Paul. So it is one that I think, and we've seen it through Earth, where we had different funds, that we were then saying to investors, okay, it's time to be selling the gold fund and buying into the more base metal intensive funds. But yeah, you're getting it all into one fund. And we through our experience, we think we've got the nous to be able to see when it is time to really be invested in which metal through the cycle.
Thank you. And Mark, do you want to talk a little bit about some of the what might be referred to as the battery metals, or the metals going to be required for electrification, and which ones you prefer, and how you see the outlook for some of them?
Yeah, thank you, Paul. So how I see it, there's a global theme here, of themes: decarbonisation through transport and industry, and energy sources. We're trying to look for renewable sources of energy. Those sources of energy have to be sustainable as well. And on the back of that, you've got a population growth, which is putting pressure on the whole base metal and metal industry. The focus, people call it the green wave. The immediate metals that are needed for the decarbonisation and electrification of the world through our energy transition, we call it, it's principally copper and nickel. So those are the metals that will benefit through the cycle, both in electrifying the planet, but also moving away into renewable sources of energy. You still need to transport the electricity through networks, which are ultimately copper-based networks. As we move into more of the niche electric vehicle industry, we've already had some false starts in that industry, and you can quite easily portray an aggressive supply deficit in lithium you need for batteries. Reality is that this wave will come, but we see it coming maybe 5-6 years down the road. So we're cognizant of the fact that the market has got ahead of itself in some respects to some of these specialty metals, but we're aware of the future demand that's needed for these metals. So as George was saying, we can invest through the cycle on different metals. These metals will peak and trough at different times, depending on their flavor of the month with the market. But for us, we're going to look at the fundamentals of supply and demand in rare earths, heavy rare earths in principle, lithium, graphite's needed as well. And then for the hydrogen as well, big drive now for clean energy through hydrogen, reducing the carbon footprint of transport and industry. And that needs platinum. So there's a lot of metals that we can look at into the future to really work out when we should be in them and not.
Yeah, thanks. And George, actually, one question that often comes up a lot here, particularly in relation to rare earth metals, and I guess also battery grade lithium and some other sought after metals that are needed for electrification, is the dominance of China. And do you think that in the West we've just got too far behind in these supply chains, and do we need to be investing more in developing supply chains that are maybe independent of Chinese dominance?
I think there's a big drive at the moment to try and be a little bit more independent from China. As you mentioned, 85–90% of the critical metals is sourced from China, and it's really driven a exploration drive in countries like Australia, in South America. So I think the investors will pay a premium for these projects that are sitting outside of China. That's why Mark and I are spending quite a bit of time doing meetings with companies who've got projects outside of China, because we think that this will be the future. I think any manufacturers of electric vehicles, they'll sit and they wouldn't want to be 100% dependent on China for the source of a lot of the critical metals, and they do exist elsewhere. You just got to understand what metal in what format, the whole metallurgical process as well. It's quite a complicated science, but we are spending a lot of time looking at that right now. Paul.
Yeah, I think one area where we'll have some really interesting overlap is that we look at a lot of new technologies being developed for electric vehicles, for electric motors, electricity generation, and that hopefully will give us some insights over which of these technologies is going to win out, and therefore where the demand for the raw materials is going to get concentrated. And I'm hoping that will be a very fruitful area of joint research over the coming decade. And then just, I think probably to finish, Mark, maybe you could say a little bit about your investment disciplines and how you approach specifically investing in a mining project.
Yeah, thanks, Paul. We like to call ourselves bottom-up investors in a sense that given our dual expertise in mining, exploration, and on the financial side, we like to screen companies from first principles. We look for quality assets, so grade is important in a mine, distance from the mill, strip ratios, what are their underlying operational costs, capital intensity, how expensive is it to put this asset into production and keep it in production, and the complexity of the ore body as well. How easy is it to mine? What are the problems coming down the road? So that's our first framework to looking and screening companies. Also, we want to invest in companies that we can see can make future value. So this is when we put our geological hats on and look at the ore body to say, is there an ability for this company to increase reserves in this and resources in this ore body that the market doesn't see or pay for? And we can see the future 5–10 years out, that this is going to be a material ore body. And as they grow the ore body, you grow your operation, you increase the throughput in your mine, you generate more cash flow, you generate value for shareholders. So we're trying to pick those companies as well. We can see future growth. On the back of that, that's all very well and exciting, but if you don't have good management, you can't put these plans into operation. So we got to then have another screen that we look for good management. Given that we've worked in the industry now for 20 years, we get a good feeling, and we know a lot of the players in the industry. One thing to appreciate in mining and exploration, there's probably 1 or 2 degrees of separation between all the players in the industry. There's not a lot of new talent coming into industry because it's been seen by the millennials as a dirty industry. So we know all the players as they're aging, so are we. We know the the good cops from the bad cops in the industry. So once we put all this screening into play, we then feed it into our in-house ranking model. So we always build a model for every company we invest in or don't invest in. And then we actively rank these companies on a daily, weekly, monthly basis to see which ones the markets are preferring to invest in and those that are not. That gives us an idea of which way the market's trending in terms of its investment horizon. And also it gives us an ability to step back and say, why doesn't the market like this company, for example? Let's do some more work on this company. This could be a hidden value here that we can invest in if we're comfortable with the company.
Great.
And this is an iterative process done every day, every week, every month.
Thank you, Mark. And maybe a final question for George. Over your 25 years or however many years it is investing in this industry, what are some of the most important lessons?
It's trust the people. Mark and I have spent quite a bit of time visiting projects themselves, because the people on the ground are those who are going to execute against plan. We've had so many times where plans are put in front of us, business plans, which have failed because of a lot of the times it's the people who are in place to execute these plans. In addition, the country risk is increasing all the time. And we've seen great projects where legislation can change, or something has been done in the past which comes back to haunt these companies. So it's one that just don't be careful about the margins that you're talking about. That's got to be a robust enough project. Don't get in too early stage, and trust the people behind. And that's where, as Mark mentioned, our network that we've built up over the years, that we can pick up a phone call if we're not too sure. We actually like to see companies, especially the CEO, face to face. Unfortunately, now with these times, it's more difficult. A lot of the people we do know, and so we just do add an extra layer of due diligence in that process. But it's a difficult. I've seen so many investors believe great stories and lose a lot of money investing in this sector. So you just got to be, if you're cautious, put another layer of caution into that investment process. And then if you're satisfied, then trade carefully, but just keep watching. It's a very dynamic industry, and that's why I think you need to keep your finger on the pulse. We've spoken in the fund about limiting the number of investments, because we really need to keep a close handle on these companies.
Fantastic. George, thank you very much. I'm very much looking forward to working with you over the coming years, and looking forward to discovering some of the great mining companies that the fund will invest in. So thank you for sharing your time.